Well, the markets are open. Let's take a look at what they're doing here, shall we? I'm Marlon Bowling with you, your tour guide to the ag commodities. First of all, on the corn, with our quotes from bar chart, we have March down 4 cents. We're at 6.12 even now. Now it's down 4 1/4. Your December corn currently down 4.5 cents at 5.60 3/4 this morning. So it's similar to how we wrapped up the overnight trade. Soybean market, same story here. March down 13.5. We're at $14 3/4 cents. You know, we got as low as 13.96 3/4, and right now it's a battle to hang on to that $14 mark. We have September currently down a dime at 13.34. And let's go ahead and bring up the November contract here on the soybeans. We'll see how they're opening up here this morning. So far, they're down 8 cents at 13.08 1/4. Well, moving on to the wheat complex, we'll start with Chicago, where the March contract is now 8.5 cents higher. We're at 7.88 going the other direction here. July is now 9 3/4 cents higher. On the Kansas City market, you have the March now 9 1/4 higher at 8.02 1/2, and you have July 9 1/4 higher as well. Spring wheat trade, Minneapolis March now 5 1/4 higher. We're at 9.41 1/4 in July, 3 1/4 higher. And I want to kick this over now to Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky, who joins us. And Dewey, there's a lot of outside influence here on the markets, and it seems to be causing a lot of consternation among traders and analysts about how much impact, if any, all these different outside factors may have. There's a lot to consider these days. What are you looking at?
Well, I've said in my market comments, and I think even said here a couple of weeks before, I think the greatest factor we have to look at here in the ags, and that may very well be geopolitical factors here for 2022. And that's, so far, that looks like that may be what's going to bear out.
Are you talking mainly about what's going on around Ukraine? Are you talking more about tensions that are escalating now in Taiwan or other parts of the globe, or what?
All of the above. You've got a situation here. Yes, you got tensions between Ukraine and Russia that are escalating. Also, too, you're seeing a greater alliance now between Russia, China, and also Iran.
Well, that's a little unnerving. Now, where does South American production fit into all this? They're still not really out of the woods either, are they?
They're not out of the woods, but it's almost here. We're working here on the 1st of February, so how much longer are you going to be able to put South American weather into this? You can maybe a little bit, but you're going to start seeing attention. It's going to start begin to focus here on what we're going to be planting here this spring and weather.
Who do you think is winning the battle for acreage right now? Corn or soybeans or cotton?
I think probably soybeans are.
All right. Why do you say that?
Well, it's because of the price relationship. And also, I think we're going to get a few additional acres here in corn, you know, depending on what the profitability looks like individual operations.
Really? Okay. Well, that's interesting. Now, let's take a look at the value of the U.S. dollar. Let's go over here and take a look at this. On the dollar index this morning, this morning we were up about 400 points. Now we're up 439. The crude oil market was under pressure quite a bit here this morning. Now we're down $1.70 at 83.44. Is that going to add pressure to things like the corn market, do you think?
I think it eventually will. One thing I would like to say about the corn and the beans, when I look at the Commitment of Traders report for about the past, well, actually since the 1st of January, we've been looking at the commodity funds have been lightening their long positions on both corn and soybeans. Now, of course, those markets have gone up, and a little bit of that has come from the index fund, but more of it has come from your small traders. And what that tells me, the smart money is getting out, and the money that's not so smart trying to get in.
Okay, we'll come back in a moment here, Dewey, and we'll see how the cattle complex is opening up after we had that cattle on feed report that came out Friday. We'll take a look when we come back. Well, as we work against the backdrop of the cattle on feed report numbers that came out Friday after the market closed, let's see how the live cattle are trading this morning. Well, we wondered. It was a relatively bearish report, and we do have cattle going down this morning. February down $1.37. Look at April, now down $2 and a nickel, now down 207 at 140.02. and it actually has been as low as 139.70 already today. So a lot of downward pressure here on the live cattle to start out. On the feeder cattle market this morning, we have the March down $1.80 at 161.50, and that would be about 60 cents, 55 cents off of our earlier high this morning. It actually, believe it or not, has bounced about $1.30 off of its earlier low, so it had a very choppy open. Came off of that quite a bit here off the low this morning, but still down $1.80 as we speak. Now, on the lean hog trade, you have February down $1.22 at 84.97. April down $1.27. We're at 93.67. And it looks like it's all front loaded on the bearishness here on the lean hogs this morning. Let's go back to Dewey Strickler. Dewey, we had that cattle on feed report that came out. The placement number was very high compared to expectations. Some thought that that would maybe put more pressure on the feeder cattle market and not so much the live cattle trade. Doesn't seem to be the case here today.
No, it's not quite worked that way. As you and I discussed during the break, sometimes feeder cattle trade in their own world there, and that sort of looks like what they've been doing here. There's, of course, a lot of things going on. Your stock market's down well over 500 points. That's putting pressure on all of the meats here today. And also, the economy doesn't look like it's as strong as what a lot of people think that it is.
So what do you think about all this talk about some interest rate adjustments moving through the course of 2022 here? You know, the Fed may take several actions, according to most analysts there, but what would that do to our meat market? It seems like we already have shortages in some areas.
We do have shortages. The thing I'm concerned about in interest rates, Marlon, is that we could be looking at interest rates to be forced considerably higher than what people think that they could.
So do you want to take a guess? I mean, just how much the Fed would dare to push it higher this year?
I don't know that the Fed knows how much they can push it higher here because we have a lot of things working here right now that they simply just do not have control over.
Exactly. I've heard some comments about that their hands may be tied, and that they can't even do all that much about it this year. Dewey, excellent information. Thank you for joining us here this morning. Dewey Strickler of AgWatch Market Advisors. He's in Franklin, Kentucky. Look at that Dow that Dewey was just talking about. It has been chopping around here this morning. And right now, it just came off of a little over 300 lower. Excuse me, that's a look at the NASDAQ here. Let's take a look at the Dow here, see what it's doing. Yeah, the March contract currently down 581 right now, 33,576. That is a precipitous drop, and consider that we were up above 36,000 not very long ago. So quite a turnaround, a lot of nervousness in the trade here today, so we'll have to keep tabs on that. Janet, with that, I will turn it back to you.